This is Andrea Wells with Insurance Journal reporting from the WSIA annual conference in San Diego. A big part of the AM Best report this last year, we saw like a growth in personal line segment in E&S. And I'm sure it's continuing to grow, but can you describe why personal lines is making a bit of a headway? I know it's still a smaller portion of the overall market share, but what are some of the reasons why we're seeing more interest in personal lines for surplus lines?
I think because of claims history, because of cat events, because of wildfires, you're seeing a need for E&S to come in and kind of save the day where the admitted markets are pulling back. And you do have admitted markets starting their own E&S divisions and
Sure.
Jumping into that space. You have your traditional E&S markets like Lloyd's out there writing business, but it's going to be essential because I don't think that this flight from admitted markets are taking from cat exposed areas. I don't see that slowing down anytime soon. I think there's going to be more of a need for E&S markets to jump in on the personal line side and take a larger chunk of that business.
Like personal lines, high value homes, or are you seeing other products even in like the automobile? I don't know if that's a part of it as well. And I'd love to hear about your thoughts on some of the risk mitigation efforts that are out there and if that's really helping at all.
I see it mostly on the homeowner side, definitely on the property side. There are new technologies coming out, particularly in wildfire exposed areas with different kind of roof systems that can spray fire retardant ahead of an event. But at this point, some of those systems are extremely expensive. So I don't know how many people are actually going to participate in that. Is there a way to make those more affordable? Hopefully, as you see people rebuilding houses after wildfires, are those houses actually going to have to be rebuilt to a smaller scale in order to protect them and retrofit them with these systems so that they do have wildfire protection going forward.
Great. I have one more question that I thought of. So how does a surplus lines, personal lines product differ from maybe some of the fair plan products that California and Florida we see, in some of the really high cat areas?
Because you can potentially buy broader coverage than what the fair plan is offering. Mm-hmm. So I mean, it's going to come at a higher price.
Sure.
But you can potentially, get broader coverage and full limits on your home for, home contents, other structures. Whereas with the fair plan, when it comes to the high valued homeowner space, you're probably not getting that full coverage that you could get with a true E&S carrier.
The Risky Future Summit 2025. Don't miss out. Click the link in the description to sign up or apply to be a speaker for our Risky Future Summit 2025 before seats fill up.